this episode of the Free Home Buying Guide. And today we're going to talk about debt elimination. I had to say it like that. When I typed it, that's the first thing that came to my mind. So, we're going to talk about paying off debt. One of the things when you are working to purchase a home, you might want to pay off some of the debt you have because that will leave you more money. You have to do so many things. We'll talk about some of the things you have to do after you become a homeowner, as well as while you're preparing for home ownership, how debt can affect you, and why you might want to try to pay off some. It'll be beneficial to you. But first, we're going to jump right into it. If you have a toxic relationship with Afterpay, you might want to work on that first, because it does not matter if you go get a new job and you get a huge promotion or increase in salary. None of that really matters if you don't correct the bad behavior. So if you currently have a toxic relationship with Afterpay or Klarna or any of the other places like that, you might want to work on those and try to work to eliminate them now, because buying a house is not going to make you all of a sudden do way better with your money. You have to start working on those things before, which is one of the reasons I highly recommend building your emergency fund, paying off debt. It's not just about building up the money. Some people say, oh, well, telling people to save all of that money is discouraging and makes them think they can't be a homeowner, when it's not that at all. Really what it is the good financial habits that you build while saving money and learning to pay off debt. You learn to live without doing all of the excessive spending that most people do. So it's usually very beneficial to you in the long run, because you just create better financial habits and you become a better steward over your finances, which that is what's going to help you be a good homeowner. So I hate to say it, don't shoot the messenger, but yeah, you might want to work on that. Slow down on using them. Not to mention, a lot of them are working to start reporting to the credit bureaus, which means that those will be small debts that are constantly getting added to your credit report and taken off, which in my opinion can have a negative effect on your credit. So just a couple of things that you want to think about, and you want to start working to build those good habits. So getting further into it, before you start this whole process, one of the biggest things you're going to have to do is set specific goals for yourself. I highly recommend setting SMART goals. SMART goals are basically goals that are very specific, that you can measure, and you give yourself a time that you need to complete them. So most of the time when people say, oh, I want to buy a house, or I want to travel more, or things like that, they're very vague and very general. And if you know anything, you're supposed to be specific with your goals. You're supposed to be very specific. So instead of just saying, oh, well, I want to buy a house, you want to say, I will pay out $10,000 in debt and save $10,000 for my down payment. And then you're going to say by what time you're going to do it. And the reason why this is important, because it gives you something to measure. So for example, if I say I'm going to pay out $10,000 in debt by 2023, okay, well, right now, currently, this is being filmed in August. So this lets me know I have about 4 more months to the end of 2023. And I'm supposed to have $10,000 in debt paid off and $10,000 saved for my down payment. So I need to get a check. I have to do a financial checkup on myself to see where I am on my goals. But by me having set goals and a timeline, I can decide, okay, I got 4 months. I need to hump out these 4 months. I need to be serious. I need to be on my ball, on the game for the rest of these 4 months. If I see that I'm closer to my goal, I can more so coast along. So you see, it's very beneficial to set specific goals. It also gives you something to work towards and a timeline to work towards. You're not just working aimlessly and just naming random goals. You're working towards something specific. So that usually motivates you and will help you work around it and just do better overall. Me, myself, I am no stranger to this struggle. I've been there, done that. I'm probably going to get a couple more t-shirts. I was born and raised in Chicago, grew up on the west side of Chicago, and those people who are not familiar is like the hood. Like, I grew up with, violence. Most of the people who went to grammar school with me are either dead or in jail. Not many of them went on to do many big things, but we came from a bad neighborhood. It was a food desert. My mom was a teenage parent. I was a teenage parent. So that alone created financial obstacles for me. But I had to overcome them. I self-corrected my credit and, tried to build up before that first home I bought, like we talked about on the other video, and I bought it by 27. But again, I was a single parent, which created financial obstacles on its own. And then, I wanted to live. I wanted to have a good life. I wanted to just do better and create a better life and a stable life. And I didn't want to have my child grow up the same way that I grew up, So I had to make some decisions. And I worked for the post office probably about, I'm going to say 7.5 years. But again, like I told you, I injured my ankle shortly after I bought my house. I was off work on and off for probably about 2 years. I had boots, casts, and eventually ended up having to have surgery on my ankle, which that prevented me from doing a lot more things. And obviously I couldn't deliver mail for 20 more years after I injured my ankle. So I had to make a decision. So I left the post office and went to another job, but I ended up having to take a $20,000 pay cut. And at that point I had to, I thought I knew how to budget, but when you take a huge pay cut like that, you become the master of budgeting because you really don't have a choice. And we all know it's just like when you're waiting until payday and you haven't been paid and you spent all your money, but your payday is a week away. That's the best budgeting you will ever do in your life. So I got really good at budgeting, and it actually opened up me the ability to be able to travel. So, if you look at these pictures, I'm here at the top picture with the heart. I'm in San Andres, Cartagena. The one next to it, I'm in Panama. That's me at Carnival in Trinidad. I'm in Egypt, and then Belize, which is like my second home. So this was my goal and my motivation to help me get better with my money, because if you want to go on multiple trips, you have to budget for those trips. You have to pay on them. You can't wait to the last minute to pay them and stress yourself out. So these are the things that really help me identify, okay, I want to go on this trip by this date. If you're a traveler, that's a great way that makes you budget, because you have to pay the money by certain times, But as I go through all these transitions and buying my house and self-correcting my credit and just learning how to budget, as I did these things and all of my circle around me, they begin to ask me questions. I became the go-to. Like, my friend still jokes and calls me his financial advisor. So that's what helped me understand that it wasn't only me that didn't have this information. It wasn't only me who didn't learn about financial literacy or have the ability to gain those skills, which is vital. Like, we pump. I know why Y equal MX plus B. I could tell you what pi means, even though I don't use either one of those things, but that's what was pumped in my head, as opposed to learning how to do taxes, learning how to budget, learning how to write a check. I had to learn all those things the hard way. So that was one of the reasons that made me create Perspectives, because my vision is for us to be better stewards over our money so that we can teach our children to be better stewards over their money. And thus was the birth of the Money Mastery Academy. Again, that's a monthly membership that I run. I bring in financial experts 2 to 3 times a month. And then I do some trainings myself also. And then, being a member, you get access to my full online library. So if you can't attend a live session, you automatically can just watch it whenever you're available, because I understand we're super busy. I understand we're not loaded with money, but it still should be a way for us to gain access to financial education that can help us learn more about all the different parts, because there's so many different things you can be a real estate investor. But do you know there's like 5 ways you can be a real estate investor? There's not one cookie cutter solution for anything. And it's hard for you to build up the financial plan or financial goals that work for you when you don't even know everything that's available. So that's one of the reasons why we're here today, because when you purchase a house, they're going to look at your overall work, credit profile. They're going to look at your financials. They're going to look at your debt. They're going to look at your credit. So the process that you go through to prepare yourself for home ownership, you can use that same information, that same work that you're putting in, and use it to prepare your finances as a whole and leave them that way so that you can go on to do other things. You can get lower interest rates on your houses, lower interest rate on cars, lower interest rates on insurance quotes. All of those things will benefit from you taking the steps and actions that you are taking. So even if you decide, oh no, home buying is not for me, these videos will still help you, because overall you should work to improve your finances so that you can just gain a better quality life for yourself. So one of the things lenders are definitely going to look at, they're going to look at your debt to income ratio. And it's exactly what it sounds like. It's your debt to income ratio. So they're going to look at how much bills that you pay every month. They're going to look at what the bills are that you're paying every month, and then they're going to look at how much money you have coming in. Now, the purpose of them doing this is they want to identify your credit worthiness. They want to see the likelihood that you're going to be able to pay this loan back. They want to see the likelihood that you'll be able to afford this loan. And then I'll use those numbers to give you a breakdown shortly. I personally suggest to do it under 40%. Now, some loan types like FHA and things like that, they allow you to have a higher debt to income ratio. But one thing you want to remember is FHA itself is not a lender. It's a federal subsidizing program that subsidizes loans. They don't provide the money. So the different specific lenders that offer the loans and offer the FHA loan product, they also are able to make their own. They're also maybe to make their own guidelines that will go above what FHA is requiring. It's called a mortgage overlay. Now, again, that's something else I touch on in my book, and I define it and break down like what exactly it means and how it applies to you. Because another reason why you want to work to prepare your finances for homeownership is because you want to be able to shop around for mortgage lenders and not have to go with the first lender that you talk to. You should build your profile up so you could be confident in your profile, and you'll be able to call the lenders and ask them what their criteria is and not even waste your time, because at the end of the day, it's a waste of your time as well as theirs. You don't have time to waste. So you want to make sure that you get your finances together where nobody needs to know that you have financial struggles. Get your credit together, build up your emergency fund, get your budget on point, and then go and you can shop around to mortgages and shop around and talk to loan officers, and you'll be able to ask them questions, which puts you in the seat of the boss, because at the end of the day, you're hiring the lender, you're hiring the realtor, you're hiring the attorney. So this is your team that is working for you, whether you realize it or see it from that perspective or not. The next thing is, if you want to work to pay off debt, I highly recommend you work to pay off the things that have the biggest monthly payment. And the reason why is because if you pay off the thing that has that biggest claim on your paycheck, it's going to greatly affect your debt to income ratio and lower it. And it's going to lower it quicker, which means that you will, one, be able to afford more house. They'll also calculate that when considering you for the loan. So that'll also help you and look more favorable. It looks like you're able to pay, because think about it. If you yourself was looking to loan somebody some money and you saw that they had way more bills than they had money coming in, are you going to lend them that money? Are you going to give them the money? And then think about it. What is the reason why you're not going to give it to them? You're not going to give it to them because you have no clue if you're going to get it back. They say don't loan money that you don't want back. Well, the bank wants their money back. So they want to lend it, but they want to make sure that you're going to pay it back before they lend it. And then lastly, I want you to speak to your lender. Some lenders have other things that can also help you. For example, if you have less than 10 payments on your car note, say you have a car, you've had the car for almost a full term of the car note, and maybe you have less than 10 payments left to pay on that car. Some lenders will not calculate that car as a part of your debt to income ratio, and this will work highly in your favor. So that's one of those questions that you can ask lenders when you're calling them to consider putting a mortgage application in with them. They're not going to be able to give you definite interest rates or things like that without running your credit, but you still can call them and get general idea of what are their FHA loan guidelines. What is your credit requirement? What's your debt to income requirement? I actually, in my book, I include a full list of questions you can ask your realtor, things you want to know about your loan officer. You can ask them about the terms of the loan to decide which one works for you. What you want out of a good home inspector. What does the home inspection look like? How does that process work? These are a lot of things that people don't really learn about the home buying process. So I wanted to make sure I included it all in this book so that you can just be educated. Like, I want you to walk in and they have a conversation with you. I just can't wait for the first person to read my book and come back and say they thought I was a realtor. Because that's most of the time when I'm purchasing properties, that's what they think. They think I work in real estate. And it's like, no, I just educate myself before I drop hundreds of thousands of dollars. So looking at the example I have here, so this is just an example to give you an idea of how debt to income ratio works. So let's just say, for example, you have an $1,000 income. So you have $1,000 in income, and then you have $800 in expenses. I try to keep nice round numbers to make it simple. So that means you have an 80% DTI. That 80% DTI means that 80% of your paycheck is going towards bills every month. So if you're applying for a mortgage with me, and that mortgage you're applying for with me is going to result in a $300 payment, am I going to loan you that money? Absolutely not. Immediately no. Immediately no. Because you don't even have enough money left over to rightfully pay me. This is another reason to do a budget. If you find yourself in a chokehold and you're always out of money before you get paid again, look at what your expenses are. Look at what you're spending, because you might be spending more money than you're bringing in. So if I, as a lender, see that you have $800 in expenses you are responsible for every month, and you're only bringing in $1,000, which means you have $200 left, you don't have enough money to pay me back. So I'm not going to lend you any money. I'm going to pass over your application and I'm going to reject it. So these are the things that you want to look at for yourself, because if you calculate it yourself and find out that you have a 75% debt to income ratio, it's not time for you to purchase yet. You need to come back, have a moment with yourself in the mirror and work on what you have to do before you even approach lenders, because at that point, why even waste your time? You need to bring the debt down. You know what you need to do. Now, if you're looking to just figure out what you need to do and what you need to do, that's one of the reasons why I created this, so that you can figure out what you need, what your credit needs to be at, things like that. You can call lenders and ask them what their credit requirements are and ask them what their debt to income ratios are, and then prepare your profile without having to worry about constantly getting your credit checked over, because once you get your credit check, you have 30 days. After that 30 days, if you get it checked again, that's considered a new inquiry, even if it is still a mortgage loan. So you want to consider things like that. So let's talk about debt effects. What are the effects of having all this excessive debt weighing you down? So that's the first one. It weighs you down, literally. It consistently snatches up most of your paycheck. You get paid, you get a raise, you get a promotion, and then you are consistently still stuck living paycheck to paycheck, still stuck feeling like you are struggling and suffocating in your finances, and you constantly get angry at your boss, or you get angry at your job because you feel like, oh, they need to give me a raise, they need to give me a raise. Then the next thing is you create more debt, because it's called lifestyle creep. Because you know you're getting a promotion, because you know that your income is going up, you want to go purchase something else. You want to go upgrade. Now it's time to upgrade your phone and start back paying every month. Now you need to go get a new car. Oh, well, maybe I should get this new cable program that's coming out. No. You need to keep the same bills that you have. Use that money to pay off debt, because you're going to relieve a big, huge burden off your chest. Anytime you pay off debt, you give yourself a pay raise right there. So you don't have to be mad at them. Give yourself a pay raise. Then when they give you a raise, now you got double. Okay. The second part is why you want to eliminate debt is the cost of moving. As we get older, we're getting too old to give people a pizza party to help us move. Our bodies don't work like that no more to be moving furniture. So that means you're going to need to have to pay movers to move your stuff. Okay, that's another cost. If you're straddled in debt and you're struggling and suffocating, guess what? It's going to be very hard for you to move. Then you have to furnish your new home. You have to furnish it and put new furniture in it. And I want to warn you, don't try to do it all at one time. Take your time. Maybe do one room at a time. Utilize layaway. Utilize all of the resources that are available to you. But you want to work to make sure that you're paying off debt and getting it down. Now, the first question people ask me when we talk about this is they ask me, well, how am I supposed to pay off debt? How do I start? Where do I start? So what you want to do is start with the debt repayment plan. And so with a debt repayment plan, you write down what all of the debt is that you want to pay. You write what the debt is, you write how much interest you owe, you write what the total balance is, you write what type of debt it is, you write all of those things down, because this is how you're going to decide which debt you're going to pay first. Because like I said, when you pay off debt, the more debt you pay off, you give yourself an automatic pay raise. You're giving yourself a pay raise because that money that you sent to that debt every month that you don't now have to send to that debt, that's now your money again. You've taken control and you brought your money back into your wallet. Okay. So do that. Add up your total debt payments. How much are you currently paying every month in debt? Add up the total interest you're paying on your credit cards. When you add these numbers up, this is money that could be in your pocket. This is a pay raise. Calculate how much that is per year now. That's a salary right there. That's an addition to your salary that you're paying off in debt. And you have to be honest, because if you don't be honest, write down everything, write down that care credit that's not on your credit report. Because another part about paying off debt and why it's important is because your lender is only going to base your debt to income ratio off the things that they can see. They can't see everything. So if you have care credit that's not on your credit report, or maybe it doesn't come through this account, it goes through an account that the bank is not looking at. Guess what? They're not going to calculate that in your debt to income ratio, but that's still a debt that you know you have to pay. There are debts that you know you will have to consistently pay that the lender is not going to know. So they're going to give you a pre-approval based on the information that they can see. If you have children in activities or anything like that, they're also not going to see the fees that you have to pay regularly. School registration fees. They're not going to see any of those things also. So you have to be honest with yourself so you can really eliminate some things and make some headway. So I'll give you a few tips, almost, out of here, but I'm going to give you a few tips on how you can start to work to pay off your debt and make changes in your current habits so that you can pay off even more debt faster. So stick to cash. Even if you work on points and you love your points, let that be your motivation to get back to them. Start sticking to cash. If you find yourself just spending because you know you're going to get the points, you have to set a boundary for yourself. Okay? Set limits for yourself. You're going to the restaurant, before you walk out that door, set a budget. How much can I spend? How much am I allowed to spend? And if you don't know, that means you need to sit down and create a budget, or create a budget before you go. Look at the menu before you go, so you know what you're going to order, you know how much it's going to cost, so you know what you're going to be expected to you. I also want to remind you, this process is a marathon. It's not a race. You're not in a rush. You're not trying to beat anybody. You might have to make changes, but Rome wasn't built in a day. So you might not be able to accomplish this stuff overnight. Some of this stuff takes real work. It takes real self-awareness. It takes really taking time to sit and look at yourself and see what is the reason and triggers for your spending habits. What are the triggers why you have that relationship with money? A lot of times your relationship with money is hereditary. You get it, well, rather it's relational. You get it from when you were younger and how you saw others spend money. Sometimes you do the opposite of what you saw others do, but a lot of times it's relational to how you saw money while you were younger. Okay? Then another thing you want to do, maybe create a vision board. Identify what it is that you want to get done. Put visuals wherever you can on your phone screen. Create a vision board. My vision board is above my bed. So every day while I'm getting dressed in my bedroom, I can see my vision board. I'm literally looking directly at it. So it's a constant reminder of me of what I need to do. Check your circle. Change your timeline if you need to change your timeline. Just whatever you can do to set constant reminders, and you can eliminate some of the distractions. Put your credit cards on punishment. Uber Eats, Amazon, DoorDash, all of them, take your credit cards off of there. Use your debit card to let it come straight out your debit card. I guarantee you'll slow down how much you're spending, because if those things add up, and that's money taken away from your financial goals. Okay, and lastly but not least, if you consistently try and you might need to see a financial therapist. There are therapists who are financial therapists that help you with your financial issues, and they help you dig down to think of the root of your financial problems. So this is what you want to do to start setting limits on yourself so that you can be better and you can achieve your debt elimination much faster. Okay. So I do also want to remind you, take a breath, relax. And you also want to give yourselves many chances. Sometimes you're not going to get it right at the first time. Sometimes you're going to have to experiment. There's no such thing as cookie cutter solutions. So you might have to experiment to see what works for you and what don't work for you. And don't let guilt hold you hostage. So don't beat yourself up when you mess up. We heard Aaliyah, if you don't succeed, dust yourself off and try again. So you don't want to You just don't want to beat yourself up and make it a habit. You are not the only one who has dealt with this. Other people are dealing with it. So don't think that like you need to ostracize yourself or beat yourself up or like, oh my God, I did this. It's okay. It's okay. You all have goals that we want to accomplish. We all want to, buy a house, travel the world, get a boat, like whatever it is that you want to do, it's going to take time to do it, but you have to take that first step. That's all. And it's going to be an up and down roller coaster. That's just how it works. Anything that you want or anything that's worth it, it's going to take hard work. Okay, it's going to take hard work. So if you found this training helpful, please share it, share it, share it.